right, what's going on, guys? It's Luke here. We're going to be running through a weekly outlook for the week coming up of September 22 to the 26th, 2025. I'm going to be uploading this on Sunday, the 21st, so you'll be seeing this then. I'm going to run through how I'm going to be approaching the week, basically the levels I have marked on my charts. We have a pretty simple outlook this week, and then we're just going to run through the news really quick. Before I get into this, guys, if you guys wanted a discount with Alpha Futures, and if you haven't signed up with them and you're looking for a prop firm, I have a link in the pinned comment, and if you guys want to use that, I think you get 10% off normally or any of the best available discounts. So if you guys want to check them out, link in the description. And if you guys want to join the free Discord, link is also in the pinned comment as well for daily analysis, market breakdowns, premium education, all that stuff like that. So all that's linked in the description, so, and in the pinned comment. And let's get into this. So starting off on NQ, we're going to run through NQ and then ES, and then we're going to get into the news. Start off in the weekly time frame. We obviously had a crazy strong bullish close. We had, a good amount of news this week. We had a nice close above all of this range bound we've had in the last couple weeks, and price is still maintaining overall bullish order flow, right? We look on the daily, again, we're just slowly keep moving up and up and up and up and up. These last since about the beginning of September, we've just been on that steady climb to the just keep putting in new highs. So basically, FOMC, we had this big wick to the downside, which ended up filling and respecting these daily bullish fair value gaps. And since then, on Thursday and Friday, we ended up just pushing and, continuing into all-time highs and continuing into price discovery. So basically, the levels I have marked out on my charts, starting from the daily, is I have obviously this previous week's high, which is our all-time high, which is probably going to get taken out because we closed super close to the end of the wick. And then we have our previous week's low, and we also ended up putting in a new weekly bullish fair value gap right here. So this could be a key area to keep marked on your charts. Other than that, this down here, again, leading into the higher time frame monthly bullish fair value gap, and all this low resistance weekly liquidity leading into this weekly fair value gap. It's not really too relevant to us this week, I don't think. You never know, but I'm kind of just marking out the levels that are most relevant right now. So I have obviously this previous week's high, which is our all-time high, which is obviously going to change, but just for now, and this previous week's low and this weekly fair value gap. Now we go down to the daily, and basically all I have marked out right now is this daily bullish fair value gap as well. I think this daily fair value gap right here is going to be key guidance for us through the week. If we do get that pullback into there, I feel like that will, set the tone. But I'm going to flip over to ES really quick and go through that really quick, even though it's about the same thing, right? So we'll start off on the monthly. Obviously, our monthly candle is in a very strong push right now. We have that monthly gap down here, which will be for later on when we do get a sell-off eventually. On our weekly, we had a strong bullish close, just like on NQ. Again, pretty much the same thing. What I have marked out is the previous week's high, which is our all-time high, previous week's low, and then we have this weekly bullish fair value gap as well as a sell-side draw. We go into the daily, same pretty much scenario. We respected this gap off the FOMC wick, and we closed strong up on Thursday and Friday, and again, continue pushing into price discovery. We do not have a daily bullish fair value gap as well, but like we do on NQ, but it's pretty much the exact same scenario. Overall, higher time frames and bullish order flow. So let's flip back to NQ and kind of go through what I'm looking at for this week. So basically, coming into the week, we probably see continuations into price discovery, whether we pull back first or whatever. Like, that would be obviously our first scenario. We just continue into price discovery. We continue to make new highs, new lows, and then we use those overnight highs as our targets to continue to trade up with the trend, right? And if you notice the last 2 days, I think it was Thursday, Friday, pretty much all-time high was the draw. If you took longs during AM session and you caught those longs to all-time highs, you pretty much, hit bangers both of those days. So again, catching those longs back up to all-time highs, over to overnight highs, getting that pullback, target the overnight previous day high or the London highs or the Asia highs, whatever. It's been working pretty well, right? So if we continue to move into price discovery, that would be our first scenario. Our second scenario here is going to be seeing how we respect this daily gap if we do get into here. If we continue to respect this gap, then obviously we're going to likely continue up. But if we do end up flipping this gap, we inverse it to the downside, order flow starts to shift bearish, then we're going to be looking to seek out the previous week's low and that weekly fair value gap. And then from there, we could potentially see a bounce from there. Or if we get below there, that's when the real sell-off begins, right? So This daily fair value gap right here is going to give us good guidance. Again, if we respect this gap and we continue up, we're going to continue into price discovery. If we flip this gap, we're going to be likely seeking out that weekly fair value gap in this swing low from FOMC right here, which is leading into that gap, which will be a key area right here. And then if we flip that weekly gap, that's where we run down and take out all of this sell side. But I wouldn't really be too concerned about that this week. But I mean, you never know. So those are the scenarios I'm looking at right there, guys. Again, if we move into price discovery, you want to be targeting, your overnight highs as your draws on liquidity and trading with the trend. I mean, as long as the setup on the lower time frame gives you that would be scenario number one. Scenario number two, we get that pullback. We see how we react off that daily bullish fair value gap, and we look for continuations up again on the higher time frame. If we do flip that daily fair value gap and we start getting a move down, we would be seeking out the previous week's low and that weekly fair value gap, and we either see a bounce from there or we continue to flood below there, and then we flip and run this sell side liquidity. We're going to have to see how news plays out this week. I obviously have a bullish outlook on the week again. As long as the trend continues bullish, I'm bullish. I'm not just going to be trying to catch tops, but everything obviously depends on the lower time frame, right? If we go into the 4 hour, again, we're just continuing to trend up slowly but surely. We're continuing to trend up. So every day is going to be dependent on how price action is looking at in the AM session, what happened overnight, what's going to happen with the news. But overall, basing it on the higher time frames, we either see a continuation into price discovery, we see how price reacts off this daily fair value gap. If we continue to respect it, we'll probably continue to push up. If we flip it, we're going to be probably looking to seek out that previous week's low and that weekly fair value gap. So overall bullish outlook on the week. We're going to take it day by day, minute by minute, see what happens with the news, see what happens overnight, use our overnight draws on liquidity. But that's overall higher time frame, how I'm approaching the week, overall bullish. ES is pretty much the same thing. I'll flip over there really quick, but we don't have that gap. But if we start getting a shift on the lower time frame, we start getting a break below these lows, we're going to be looking to seek out that FOMC swing low into that previous week's low, into that weekly fair value gap, and then we'd have to see what price does from there. If it flips it, we take sell side. If we respect it, we continue up. Pretty simple. I'd be keeping an eye, obviously, on this previous week's low as your main sell side draw on liquidity. And on NQ, we want to be really paying attention to this daily gap. That's pretty much it. I'm going to run through the news really quick. So on Monday, we have no major news, but we do have Orange Folder, FOMC members speaking at 12. On this day, I'm going to be preserving capital for the rest of the week just because we have a pretty eventful week, which you'll see really quick. But I will be probably just sticking to eval. If I see something A+, I'll take it. I'll be on the charts, but I'm obviously not forcing anything on a Monday where we have a ton of news. But yeah, trading eval, we'll see what happens. Try to get some extra capital, extra allocation, but preserving my actual capital. Tuesday, we have Flash at 9:45, which I'm obviously going to be waiting for. I'm not trading before Flash. We have some Orange Folder, Richmond Manufacturing Index at 10, and then we have Powell speaking at 12:35, which is the main event right here. So basically, I'm going to be waiting for Flash to play out, and then I'm going to be waiting for the news to kind of settle down. So I usually like to ideally wait 5 to 10 minutes after the news, wait for that to play out. So probably around 10 o'clock or so, I'll be looking to trade on Tuesday, but I will be de-risking just because we do have Powell speaking, and I don't like going heavy risk just in case the volume dies down and we don't get that delivery, because a lot of people like to wait for that speech to trade, right? That's when the real volatility will come in the PM session. So I will be de-risking, but I will be trading pretty much normally, just waiting till after Flash, so probably around 10 o'clock, going lighter on the position and waiting for something clean, obviously. If the delivery is not good, I'm not going to force anything. Wednesday, we just have new home sales at 10, which isn't Orange Folder news, but we do get some good volatility off this, so I probably will ideally be trying to wait for this, but if I see something before, I will take it. It's not a red folder technically, but I ideally like to wait for it, but it will be a normal trading day regardless. If I see something before, I'll take it. If not, I'll wait. I'll be patient. Thursday, we have GDP unemployment claims at 8:30, and 10 a.m. we have existing home sales. So this will be a normal trading day for me, market open. I will be cautious of existing home sales, but I'll still be willing to trade normally that day. And Friday, we have core PCE at 8:30, and then 10, we have revised consumer sentiment, which is just an Orange Folder again. This will be a normal trading day. So again, I'll run through it. Normal trading day on Friday, normal trading day on Thursday. Wednesday, normal trading day, just being careful of new home sales. Tuesday, normal trading day after Flash. and just de-risking just because of the Powell speech. And then Monday will just be an eval trading day for me. So that's going to wrap it up for me, guys. Again, if you guys want to join the Discord, link is in the pinned comment. Alpha Futures sign up link in the comment as well, pinned comment as well. And I'll talk to you guys in the next one. Peace.